I'd like to give the floor over to Deon. Deon, is there anything that you'd like to share a little bit more in detail about startup funding in South Africa and how we can obtain it?
Yeah, I actually do have a couple of slides as well, but I'm not sure I can get them up. So let me just try that. And then if I can't, then I'll just carry on talking.
Go ahead.
I just hope I can get the slideshow started. All right, there we go. Can everyone see that?
Yep, thank you.
All right. So, I think everyone, we've been talking a little bit about some of the funding sources and the options for getting funding and investment, but I think I've got a couple of slides on that just following this. I think I've got 4 slides in total, but I think the prerequisites to that and to considering, what your funding options are is just to make sure you've got a viable proposition. And there are different stages of a business, I agree, and there are different funders, as you say, whether it's very early stage and you've got an idea with a little bit of investment, not much else, then perhaps, and no revenue, and maybe you're a seed or pre-seed. I battle with some of these definitions as well because they all overlap each other, and we'll discuss it a little bit later as well. But what's really critical for me is before you're thinking about that, and one of the topics we wanted to cover was just the prerequisites. If you don't have a viable proposition, and a viable proposition is an objective thing, sometimes, well, it's rather a subjective thing. You may be convinced about it, and if you're not convinced about it, as Nadia said, then don't bother. Because if you don't believe in what you're doing and you don't believe in yourself, then what you'll find is nobody else will believe in you. And that's the first key. So I've seen a lot of, I've had quite a few sessions with guys who I seem to think that they have a viable proposition, but they really don't. And a viable proposition is something that works commercially, or that at least the idea works commercially. And that means that you can at least just draw a little diagram, even if it's 3 little pictures and 2 arrows, saying, this is what my product or service looks like. This is who I'm aiming it at. And this is how I will make money from it. And when I say make money, just show how one transaction works. Without that basic, and I've put their minimum viable proposition because, and let's just break that down a bit. A proposition is you've got a proposition for somebody, whether that's a service, a product. Maybe you've got a proposition for your future wife. But a proposition is something that you are proposing to someone, and they need to either take you up on it or not take you up on it. If you don't have a viable proposition, then really get that right before you even think about funding sources. And don't just think about it in your own head, test it on other people as well. So you need to believe in it, but it's not good enough that only you believe in it. Test it on people who are your potential clients, and test it on people who have some knowledge in the business, on the business stage. And then, as to stage, I think the stage of an investment in an idea is sometimes where you are in your product or service development as much as it is where you are from a revenue perspective. Because if you're going to build out a digital or a fully automated proposition, then really you're probably going to have to, well, you are going to have everything in line before you switch on a button and you're taking digital customers. You don't have time to interrupt that process. It may be in beta and you may be improving it along the way, but if you launch it, it needs to work. And particularly from a digital perspective, you're not competing against other South African startups. You're competing against Netflix, you're competing against Apple, and you're competing against every big guy in the world. Make sure that your experience can at least aim to be as seamless as theirs, and make sure that your product or your sales cycle actually works, not just in theory, but that you're certain it works in practice. And then I think, I've said it as well there, what investment have you put into your business? I think whether it's a seed fund, an angel investor, anybody, friends or family, people are very reluctant just to invest in an idea that you tell them about one night. It needs to be a little bit more than that. I agree. I don't think you need to have financial projections and 5-year cash flows at a very early stage, but you should at least be able to show what kind of target audience you have, what your product or service is, what some potential revenues are. And if you can't demonstrate that and get some objective feedback on that, then you need to go back and keep on doing that until you decide to go for funding. And then, with regards to that, I've said, what funding stage do you think your company is in? Because it's not, I think Lavina's guide was very accurate. It shows you kind of what revenues guys would put for seed, early seed, so on and so forth. But what's important for you to decide is, am I at a seed stage? Maybe I'm actually later than seed because really I don't have a lot of money and I don't have revenues yet, but I've actually invested in this. I've put a bit of money in, I've put time in, I've maybe got some kind of wireframe that I've built, and I can demonstrate something behind this then it's more than just an idea. And so, generally what we're speaking about is startups, and we're talking about, again, very difficult. And I have, a lot of colleagues. I worked in the bank, but I have a lot of colleagues who worked in VC funds. As you said, these guys can look at 1,000 applications within, in a week, and they kind of just toss them away. Attention span very small. Unless it grabs them, they're kind of throwing the stuff away. And from 1,000 applications, they'll probably pick 30 to 40 and take those to the next stage. So, you need to have a great idea, but you need to be able to articulate it and maybe visualize it before you go for this funding stage. Let me just go to the next slide. So yeah, this is not to confuse you. This is just to show on the left there. These are just some of the venture capital funds that are active now, maybe the top 50 on the left, and on the right-hand side are some of the private equity funds. There are all these different sources of funding that we talk about. There's venture capital and private equity, friends, family, angel investors. There's government finance and development capital. Give you some examples of that, venture capital firms, maybe guys like, some of Sigma and Rockport Capital that you might have heard of. Private equity players consist of bigger firms, Bain, BCG, KPMG, the audit firms, and the banks playing private equity. But there really are, these are just a few. There's a whole thing around impact investing right now, which goes across institutions. If you have a business idea or a startup idea that you can believe can make a social or a economic or obviously a climate impact, that is huge. And you can get impact investors to come in on there. So there are so many different funding sources. And sometimes to decide where you are at a stage really should indicate where you go to. And so I think this follows on quite nicely from what Lavina said, in that there's the different funding stages coming down. So there's seed funding, early, late, mature, and one that you hope you never get to, which is distressed, because that also happens, and you need funding when you're under stress. So, very much from a seed perspective, family and friends, angel investors, and VCs. Venture capital firms, generally, venture capital invest in early stage funding. However, private equity firms overlap with that. And you see within private equity funds that some of that is sometimes put towards VC and potentially later stage VC. Friends and family we know about. Be careful, because if you're going to take money from friends and family, make sure that it's money that they can afford to lose. Make sure that they understand that it's equity and that it can go, and decide up front what's more important, because sometimes relationships can disappear on the back of a bad investment, because people maybe misunderstood what you were pitching at them. An angel investor for me, again, could be a family member, and it also could be a seed fund or a venture capital fund. Angel investors typically come in very early stage. They really often are backing the entrepreneur and the person themselves. So they would like to hear about the idea, but if they really believe in you, then they will maybe give you some money anyway. And then government funding and development capital comes in all shapes and sizes. And if you think you're in South Africa and you can just get funding from the IDC, which you can also go to international government agencies and funding agencies. There are many international grants. Grant funding generally falls under government or development funding. And there are many grant funds, not just here, but from the US and from Europe as well, who are looking to invest in ideas that drive growth, that drive jobs in South Africa. So that's an idea. And then maybe just going back to this, as you see, so the seed investors, you can see as it gets later, and just an important point here, when you're into a slightly later stage, your VC, oh goodness me, your VC and PE funds, private equity funds are playing in that space, but that is when you can go to banks for debt as well. The question about loan funding or bank funding for startups is generally just those two things just don't correlate. Banks are looking for security. They're either looking for cash flows that are in place or assets that they can take security from. So unless you have someone who can provide security for you, then debt funding or loan funding, as you can see, will only come in late or mature businesses generally. And then distressed debt is obviously a separate type of funding on its own. So as Lavina said, I think the stage of your business can help determine the type of investors you should approach. Just to let you know, there's plenty of activity though. There's some stats. This is global VC. This is 2010 to 2018. You can see, I wish I could get my thing to perform here. I'm sorry about this. Global VC funds again. You can see globally over 3,000 deals, a lot of deals being done, and that's deals per year. And you can see there at the bottom, you can see the stages that they're actually in. So the green line is angel or seed investing. That would be very early. Early VC could be late seed funding. So again, they do overlap a little bit. So you could say that a late seed is an early VC, and then a later VC could be kind of getting into the target for private equity firms and for firms, maybe banks as well. But you can see a lot of activity and a lot of money as well. You can see that the blue bars represent the money, and that's in billions of dollars per year. So even as things were slowing down a little bit, you're still looking at numbers of around $40 to $50 billion a year, and that's in venture capital funding. And then just to close off, here's global private capital, and this is by private equity funds, and you can see, by different funds. So there are PE funds in here as well. There are venture funds as well. But I think the point here is that you look at 2020, a total of, and this is private capital, again, raised across funds, was $1.2 trillion. $1.2 trillion. That's $1,250 billion. So there is a huge universe of funders. Again, I'm not sure you need to make yourself attractive to investors. Maybe you need to date with them, as Adi said, but you need them to be in love with your business idea and not necessarily with you. That's also important. So yeah, I mean, that gives you some idea. You need to look into this a little bit more. There's a lot of information available, and you can find out about these different funds and what their appetites are. But again, I agree with some of the other statements. If you're an early seed VC fund, don't go to a bank for loan funding. Look at your stage and try and ascertain where you are in that life cycle of your business. That's it.